Hello. Today's topic is investing for cash flow, capital gains, or both. Let's start by agreeing to measure our net worth in years and not dollars. The calculation is simple. Take the total amount of your passive income each month minus your expenses. Then take the amount of savings and investments not associated with the passive income and divide it by your remaining expenses. That's your net worth in years. Well, hopefully it's in years. If you're younger and just starting out, there's a good chance that your net worth may be measured in months or even weeks. But don't worry, you have many years to achieve financial independence. Financial independence is when you no longer have to work if you don't want to, because your passive income exceeds your monthly expenses. The sooner you start investing, the sooner you will achieve financial independence. There are many investment vehicles out there. You can choose to start a business and slowly work yourself out of the day-to-day by hiring competent people to run it. You can also invest in real estate or the stock market. The paths to wealth are many, but there are two things in common no matter which path you choose. You can invest for cash flow or you can invest for capital gains. Let's look deeper into both. First, cash flow. This is often associated with real estate and leveraging debt. Essentially, use other people's money to leverage your down payment on a property. You'll want to include a vacancy factor in your revenue assumptions. We always assume a property will be vacant 1 month per year. The goal here is to buy a property in which your total expenses are much less than your total revenue. Then the property is said to cash flow. If that's your path and you and your financial advisor choose, we always recommend a contingency fund. Your expenses should include saving a monthly amount for capital expenses. HVAC systems wear out, roofs eventually leak, some tenants are harder on property than others, and at some point every property needs updated. You will accrue for these major costs in your expense account. But what happens if something breaks before you've accrued enough money to fix them? That's where the contingency fund comes into play. You use this reserve when a unit's vacant longer than planned or capital expenses occur sooner rather than later. Cash flow investments are typically buy and hold investments. Dividend stocks can be a different example of cash flow investments. With dividend stocks, you purchase them to provide a monthly cash flow to be used in retirement. There are certain tax benefits to this approach as compared to capital gains. See your tax advisor for details. We certainly do not recommend using debt to buy stocks. To us, that is like gambling, and we don't want any part of it. In our view, the only good debt is debt used to purchase income-producing real estate with a positive cash flow. Now let's look at capital gains. This can also be accomplished in real estate or the stock market. Think of house flippers. They buy a home for less than appraised value. Then they renovate it in a way that increases the value at a rate in excess to the cost. There are people who do this for a living. You can also approach buy and sell stocks for capital gains. Day traders do this, although most are not successful, so we certainly don't recommend going down that path. There are short-term and long-term capital gains. See your tax advisor for details. We've never been short-term investors. We tend to buy and hold most things for a very long time. Our investments in the stock market are more about long-term asset appreciation, while our approach to real estate is cash flow based. Our real estate investments have actually provided both cash flow and capital appreciation. Either path you choose, it is best to seek a professional advisor and a CPA. The key is to start early in life, so the power of compounding works for you. If you found this video helpful, then please check the like button so it is recommended to more people. If you would like to see more of our videos, then please click the subscribe button as well as the notify button to receive an alert when next week's video is posted. Until then, work hard, spend less, and invest the rest. Thank you.